Hey, how's it going, everyone? Welcome to Finance with Avrin. In this video, I'm giving you the top 5 no penalty CD accounts ranked by APY annual percentage yield for December 2025. So these are CDs that you could take with you into 2026 and lock down a high yield, because if you've been locked in with me on the channel Finance with Avrin, you know the direction of yields and deposit accounts, where they've been going and where they're going to continue likely to go, and that is downward. Now, I haven't done a no penalty CD video in a few months, but I'm still going to show you what the previous APY was for some of these accounts that are still on the list and what the APY is now. And I'm also going to give you a calculation example for all of the accounts on this video, so you can see how much interest you would earn with a certain amount of money in these accounts at a certain APY for a certain length of time. Now, with no penalty CD accounts, you can lock in a yield for a certain term length of the CD, but also have the ability to withdraw your funds from that CD without an early withdrawal penalty. So let's get into it here. First, starting with a couple of honorable mentions. Well-known banks with a nice no penalty CD account. However, the yield isn't high enough to get in the top 5 list. First up here, we have Ally with their 11-month CD account. Now, a few months ago, this CD was at 3.55% APY. However, that yield has since been lowered down to 3.2%. There's no minimum deposit required to open this CD, and the interest is compounded daily and credited monthly. And a full withdrawal may be made from this CD 7 days after funding it and having it officially open. And I personally used the Ally CD accounts before. Very simple, easy process, opening up a CD account with Ally and transferring funds from an external bank account to the Ally CD account. And then also, of course, taking funds from the Ally CD account and transferring them to an external bank account. I did that without any kind of problems. Nice app, user interface where you can see your CD account, see the interest that's being collected, credited to your account each month. Not the highest yields out there, but a great experience that I've had with them. That definitely counts. And now, calculation example, all these calculation examples I give, I'm also going to show you the information on the screen and also how it's broken down month by month, as you see it right there. So for example, with the calculation on this CD, if you had $25,000 in this Ally 11th month CD account at 3.2% APY with the interest compounding daily, after 11 months, you would earn about $732.37 of interest. So yes, if you let that principal, that $25,000 in this example, sit in this account for 11 months at 3.2% with the interest compounding, after that 11 months, that $25,000 would turn into about $25,732.37. And now on to the next honorable mention. That is the CIT Bank 11th month CD account. A few months ago, this CD was at 3.5% APY. However, it's since been lowered down to 3.25% APY. There's a minimum $1,000 deposit required to open this account, and the interest is compounded daily and credited monthly. Now, a full withdrawal may be made 7 days after the CD has been opened and funded. Now, this is another account that I've had personally with CIT Bank. I've had a no penalty CD with them. I forget the term length. I don't know if it was 11 months or 12 or 13, but it was somewhere in that range. Did not have any negative issues with the CD. Very seamless, easy process to open it and fund it, similar to the Ally CD that I had. The user interface of the app, very simple user interface, not a lot of bells and whistles. The app can sometimes lag a little bit and have login issues where you may have to log in like multiple times to actually get into the app. Not all the time, but I did experience that some of the time with my CD account and my accounts in general with the CIT Bank. But besides that, funding the CD account was easy, no issues with that. And then once the term was up for the CD, I actually just kept the funds in there the whole time, but I didn't want the option to withdraw them. So that's why I had a no penalty CD account with CIT Bank. But once the term was up and I was ready to actually use the funds and moved it out, I did a wire transfer and transferred, all my funds from the CIT Bank to another external bank account. And I did not have any issues with that wire transfer and withdrawing the funds. You don't have to do a wire transfer. That's just what I did. You could just do a regular ACH transfer and transfer it to an external bank. Now, let me give you a calculation example of this CD with CIT Bank. If you had $25,000 in the CIT Bank 11th month CD at 3.25% APY with the interest compounding daily, after 11 months, you would earn about $744.16 of interest if you let that $25,000 just sit in the account and earn that interest each month. Now, those are the honorable mentions. Well-known banks with a nice term, no penalty CD account with a yield that is nice, but not as nice as some of the other yields. And of course, they have been higher, but the trajectory of deposit account yields has been on the decline. Now let's move into the top 5 here. First, starting here with the TechCU Technology Credit Union 5-month CD account. Now, a few months ago, this CD account was at 4% APY. However, it's since been lowered down to 3.75%. And there's a $1 minimum deposit required to open this account, and the interest is compounded daily and credited monthly. And a full withdrawal may be made 30 days after account opening. And now this CD is powered through Raisin. So you have to open up this CD via Raisin. And I'll tell you about that platform. I have a section in this video just about that platform, just real brief to tell you about it if you're unfamiliar with Raisin. If you know what Raisin is, do you know about this part right here? And you can skip that section at the end of the video. But if you're not sure what Raisin is and you want to know about it, I have a section towards the end of the video. I'll show you some screenshots about Raisin and tell you what that is and how you can actually open a CD account through Raisin, because some of these CDs on this list are offered through Raisin, like this one with Technology Credit Union. Now, calculation example for this one, if you had $25,000 in this TechCU 5-month CD account at 3.75% APY, after 5 months, you would earn about $386.27 of interest. And now let's move on to number 4. We have the MY Safra Bank 13-month CD account at 3.8% APY. There's a $5,000 minimum initial deposit required to open this CD account, and the interest is compounded and credited monthly. Now, the fine print for this one states that you may have up to 2 withdrawals that can be made 7 days after account opening. And they also state that a 3rd withdrawal request will result in the closure of the account. Usually I feel like with no penalty CD accounts, people just withdraw all of it at once, after a few months if they want to, or just keep it, of course, in the account for the term length. But you have that option right there where you can make, 2 withdrawals with this one. Now, the MY Safra Bank may treat any withdrawal which would reduce the balance remaining in the account below the required minimum of $5,000 as a close out of the account. So that's also something to keep in mind. Depending on how much you put in this CD account, if you take away enough that lowers the account balance below $5,000, then MY Safra Bank just basically considers that as, you want to close the account. So that's the result of that. So you have to keep at least $5,000 in this account to keep it open, even if you're making withdrawals, unless you want to just take all of it out and close the account. Now, calculation example for this one, if you had $25,000 in this MY Safra Bank 13-month CD at 3.8% APY with the interest compounding monthly, after 13 months, you would earn about $1,032.08 worth of interest. And at number 3, we have a tie. First up here is the Mission Valley Bank 3-month CD account. A few months ago, this CD was at 4.15% APY. However, it's since been lowered down to 3.9% APY. And this CD is offered through Raisin. And there's a $1 minimum deposit required to open this CD account. And the interest is compounded daily and credited monthly. And a full withdrawal may be made 30 days after account opening. Now, calculation example for this one, if you had $25,000 in this 3-month CD account at Mission Valley Bank at 3.9% APY, after 3 months, you would earn about $240.51 of interest on that initial $25,000. Also tied at number 3 is the Ponce Bank 4-month CD account. A few months ago, this CD was at 4.15% APY. However, it's since been lowered down to 3.9% APY. And this CD is also offered through Raisin. There's a $1 minimum deposit required to open this CD account, and the interest is compounded daily and credited monthly. And a full withdrawal may be made 30 days after account opening. Calculation example for this one, if you had $25,000 in this Ponce Bank 4-month CD account at 3.9% APY with the interest compounding daily, after 4 months, that $25,000 would earn you about $321.20 worth of interest. Also tied at number 3 is the Optimum Bank 5-month CD account. A few months ago, this CD account was at 4.2% APY. However, it's since been lowered down to 3.9% APY. And this CD account is also offered through Raisin. There's a $1 minimum deposit required to open this account, and the interest is compounded daily and credited monthly. And a full withdrawal may be made 30 days after account opening. Calculation example for this one, if you had $25,000 in this Optimum Bank 5-month CD account at 3.9% APY with the interest compounding daily, after 5 months, that $25,000 in this account would earn you about $402.14 worth of interest. And at number 2 on the list is the Marcus by Goldman Sachs 11-month or 13-month CD. A few months ago, both of these CDs were at 4% APY. However, the yield on both of them has since been lowered down to 3.95%. And now with Marcus by Goldman Sachs, one thing I'll give them credit for sure is that they don't do big drops that often with the yields on their CD accounts and their savings accounts. Yes, they've dropped it here and there, and actually they raised it not that long ago, which was definitely against the grain, with what was going on in the rate environment, the yield environment with deposit accounts. However, one thing I do notice, when they are lowering them, like they, recently did with this CD account, is the amount isn't that much. It's like maybe 0.10%, 0.05%, 0.15%, whereas other accounts are sometimes lowering by, 0.2%, 0.3%, 0.5%, and so forth. So one thing I definitely give them credit for with Marcus by Goldman Sachs is that they tend to try to keep their yield somewhat high right there with these CD accounts, and for a no penalty CD account, which is nice because no penalty CD accounts typically have lower yields than no penalty CD accounts. And now with the Marcus by Goldman Sachs no penalty CD accounts, there's a $500 minimum initial deposit required to open the account, and the interest is compounded daily and credited monthly. Now with the Marcus by Goldman Sachs high yield CD accounts, you have up to 30 days to add additional funds to those CD accounts after you open it. However, with the Marcus by Goldman Sachs no penalty CD accounts, you cannot add additional funds once the account reaches that $500 amount. So that's something to keep in mind if you're familiar with the Marcus by Goldman Sachs high yield CD accounts that are not no penalty CD accounts. Yes, you can add additional funds to those for a certain amount of time. However, with the Marcus by Goldman Sachs no penalty CD account, you cannot, which is a standard thing typically with all kind of CD accounts, is that once you open it and fund it, that's it. It's locked. You can't make additional funds with a lot of financial institutions out there. And now when it comes to withdrawing from the Marcus by Goldman Sachs no penalty CD accounts, you can make a full withdrawal from your account 7 days after having it officially open and funded. Calculation example for this one, if you had $25,000 in the Marcus by Goldman Sachs 13-month no penalty CD account at 3.95% APY, after 13 months, you would earn about $1,070.35 worth of interest on that $25,000 just sitting in the account and earning that interest credited each month and having it compound and compound and compound. You see it up there on the screen, the amount of interest you would earn each month, and you see how it's slightly increasing each month. That's the magic of compound interest right there. And now let's move on to number 1 on the list, and that is going to be the Climate First Bank 6-month CD account. A few months ago, this CD account was at 4.34% APY. However, it's since been lowered down to 4.27% APY. And there's a $500 minimum deposit required to open this account, and the interest is compounded daily and credited monthly. And a full withdrawal may be made 7 days after account opening. Calculation example for this one, if you had $25,000 in this Climate First Bank 6-month CD account at 4.27% APY with the interest compounding daily, after 6 months, you would earn about $527.97 worth of interest. So that $25,000 in this account after 6 months would turn into about $25,527.97, give or take, of course, depending on the months and how many days and so forth. And this account was at number 1 when I did the no penalty CD accounts ranked by APY video earlier this year, and it's still remaining at number 1 with a slight decrease of the APY, but numbers 5 through 2, the APYs are kind of close right there, and then you have a jump right here at number 1 up to that 4.27%. And now I want to tell you about some of the things that all of these CD accounts have in common. Very important, all of the accounts on this video are either FDIC insured or NCUA insured. So if it's offered by a bank, then it's going to be FDIC insured. If it's offered by a credit union, then it's going to be NCUA insured. So up to the standard amount for both of those types of insurance of $250,000. So if something were to happen with the bank or the credit union where they collapse, they went under, bankrupt, something like that, then the FDIC insurance or the NCUA insurance would step in to make you whole and get your money back to you. And now another thing that all of these accounts have in common is that the APY that you see is a fixed rate. So no matter what's going on in the economy with the Fed fund rate, being lowered, probably happening again soon here in December, or, just down next year, 5 months from now, 2 months from now, no matter what's going on with these CD accounts, with the yield of them, if they're keep continuing to go lower, whatever you lock in and get the CD open at, that APY will remain the same for the whole term length of the CD, whether it be 5 months, 11 months, or 13 months. The APY that you get when you open the CD will remain the same for the entire term length. That is a fixed rate APY. Now, also another thing that all of these accounts have in common is that there is no monthly maintenance fees for any of these accounts. You don't have to worry about a little $2, $5, $10, anything fee like that, or something that you have to do to have the fee waived or anything like that. No monthly maintenance fees or service fees or anything like that with any of these accounts. And also, with all of these accounts being no penalty CD accounts, there is no early withdrawal penalty where you can actually make a full withdrawal. Some of them partial withdrawals, most of them only full withdrawals, but you can make a withdrawal from the CD without an early penalty fee. And so those are some of the things that all of these accounts have in common. And now I want to tell you about Raisin, because some of these accounts were offered by Raisin. And so Raisin is kind of a middleman platform. So you see the website right there on the screen. They do have a bonus going on where you can earn up to $1,600 with several of accounts that are on their website that you can open. And pretty much, I think almost all the ones that are on this video are one of those accounts that you can open and earn that bonus. And I'm actually going to make a separate video about this bonus because it's not just a, simple clear cut bonus like open an account, get $1,600. There are some things to keep in mind and some fine print. So I'm going to make a whole separate video on this bonus very soon because it actually is going to expire, I believe, in middle of January or so forth. And so with Raisin, basically, you're going to be opening an account with Raisin. So your dashboard for whatever kind of account you're opening, a CD account or savings account, is going to be through Raisin. So you'll have your login through Raisin. So the funds are going to be transferred by their payment processor that Raisin uses from your linked external bank account to the product bank. Because, you still have to fund your account. You're not funding Raisin to fund your account. So you're going to use your external bank account to fund your account that you're opening with Raisin. And the money's still going to move like that. Raisin's pretty much kind of like a middleman here. They're kind of, shaking hands for you and the financial institution, because a lot of the accounts that they offer pretty much on Raisin are accounts that you would not be able to open without Raisin. So, like credit unions typically have some kind of stipulations and requirements to become a member of the credit union and open an account with them. Well, with Raisin, you pretty much bypass that because you don't have to deal with the memberships and things like that of the credit unions that are on Raisin. Now, they don't just have credit unions, they have, other types of financial institutions as well. But I'm just giving an example of credit unions because that's typically kind of a holdup with credit unions. They have a nice yield or something, but are you a member of this? Do you work here? Do you live here? Things like that. With Raisin, you're opening an account through them and you don't have to deal with any of that. So that's one way that you're able to open certain accounts that you wouldn't normally be able to open. And that would be through Raisin. You have one account statement via Raisin. Even if you have multiple accounts open through them, you can have a couple of no penalty CD accounts, a high yield savings account open through Raisin, 2 CD accounts, a no penalty CD account, however many accounts and products that you have open, you have one login and one statement. It kind of simplifies it there. We don't have to keep up with a lot of logins and different things and dashboards and statements and everything like that. So it could be great for some people out there. Of course, some people won't like this. They'll want to actually deal with this specific bank or financial institutions that they have the account open with. And that's totally understandable. I personally have not used Raisin. I don't have anything against it. I just don't have any personal experience with it. I am familiar with it, with these videos and doing research on it and everything. And it is legit. It is a platform right there that has been around for some years. It used to be Raisin by Save Better. So if you're familiar with that branding of it, there used to be like Save Better attached to it, like Raisin by Save Better or Save Better by Raisin, something like that. However, now it's just Raisin. So yeah, that's some information right there on Raisin in case you were unfamiliar with it, but I will be making a separate video about that sign up bonus that they have going on. And that is it, everyone, with my video on the top 5 no penalty CD accounts ranked by APY for December 2025. Hope you all enjoyed the video. Be sure to like it down below and subscribe to the channel. Much appreciated. Take care.